The four financial statements for a business shows the overview of how well a business is doing. The generally accepted accounting principles GAAP requires producing these four financial statements if a business seeks outside funding. The income statement is the first of four financial statements. The type, traditional income statement, is one that is only going to be mainly viewed by external users. This statement provides a summary of how a business generates revenue and incurs expenses from operating and non-operating activities. Okay, so for this video, we are going to be doing an income statement example. Here is the given information for Company A. Okay, so for the first part is creating our heading. The first thing we want to do is create a new sheet. So we want to go down here to the plus sign, and then we want to double click it. And we want to name it Traditional Income Statement. We want to put the first cell right here, we want to put the business name. So we go to the given, the business name is called Company A. And then in the cell below it, we want to put the income statement this is. So this is a traditional income statement. And then in the third one, we want to put for what period this ends. So this ends yearly on December 31st, 2021. So we want to put for the year ending in December 31st, 2021. Here is the traditional income statement equation. Okay, so for the first part of our equation is the sales revenue. So right underneath this heading right here, we're going to list the sales revenue. And I put it in bold and underline. In column C, in the same row as sales revenue, we want to put the given information that it gave us from the other sheet. So we want to press equal, given sales revenue, and then press enter. The next part in the equation for traditional income statement is cost of goods sold. Since we are subtracting this from sales revenue, we have to put a little heading in front of cost of goods sold, so we have to put less in front of it. So it goes like this. And it's okay we put the abbreviation for cost of goods sold. Here is the equation for cost of goods sold. And then from our equation from the cost of goods sold, we start off with the beginning finished inventory. So first thing we have to do is list the beginning finished inventory right underneath cost of goods sold. Now this is not an underlined or bold since it's not part of our main equation for a traditional income statement. And then in the B column, we want to put the given amount that we got from the other sheet. You want to press the equal sign, and then we want to press the beginning finished goods inventory, and we want to press enter. The next part from our equation is the cost of goods manufactured. And then we want to go in column B again, and we want to get the given information from the sheet before. So we want to press equal sign, given, cost of goods manufactured. We want to press in this cell, and we want to press enter. And then next, we have to subtract ending finished goods. So we put less, and then we go in column B, and we want to press equal, and we want to put ending finished goods inventory. Press on that, and then press enter. And then the next part is figuring out our unadjusted cost of goods sold. So our unadjusted cost of goods sold is the beginning inventory plus the cost of goods manufacturing minus the ending finished goods. So right here we want to put, and in this we want to underline it just so we can tell that's the equation of these right here. And then in the B column, we want to do a little formula for this. So we want to press equal sign. Remember, it's beginning finished goods plus cost of goods manufacturing minus ending finished goods. And then next from our unadjusted cost of goods sold. So we want to go to our given and see what we have. We have over applied manufacturing overhead. So we want to type in, and you want to put the given amount right in column B. So we want to press equals, manufacturing overhead equals. Oh, and then we also, I forgot about this, sorry. We also want to put less in front of it since we are subtracting. And unadjusted cost of goods sold minus over applied gives us our cost of goods sold amount. So we want to put, and then we want to go in column C, and we want to take the unadjusted minus the over applied. Equal this amount minus over applied. And that is our cost of goods sold. The next part is listing our gross profit. Now our gross profit is the sales revenue amount minus the cost of goods sold amount. So right here we want to put gross profit, And we want to put this underline and bold just because it's part of our traditional income statement equation. And then in column C, we want to put equals, and we want to take the sales revenue amount, and we want to subtract cost of goods sold. And this is what we have right here. And in this amount, we want to underline it. And then the next part is listing our operating expenses. Since we are subtracting this from the gross profit, we want to put less in front of it. So we're going to type less. And we also want to bold this, and we also want to put an underline. Now, we go to column C, we press the equal sign, and we see the operating expense right here. We want to press on it, and we want to press enter. Next, to generate the net income, it is our gross profit minus our operating expenses. So we want to go to the row underneath operating expenses, and we want to put. And for this, we want to underline it, bold it, and italicize because this is what we're trying to figure out in a income statement. So instead of going to column C, we're going to be going to column D, just to show the difference and to really show out that this is the net operating income. So the net operating income is calculated by taking the gross profit minus the operating expenses. So we want to press the gross profit amount minus the operating expenses, and that is our amount for net operating income. And then we also kind of want to bold this and underline it. That's it. This is our traditional income statement.